All right, let's cover, I guess, what I would describe as maybe a little bit of tax compliance admin as we finish out chapter one. So, first thing is, let's talk about the due dates. So, federal tax returns are basically due for every tax year. There are short years. We're not going to get too mixed up in that. But they're due for every year. And, most individuals are on a calendar year end. And so that's why we think of April 15th as being tax day, because that's the 15th day of the fourth month after year end. Corporations have far more flexibility to choose what year end they are. So, but if they have a calendar year end, they're going to file on the same day, April 15th. Pass-throughs, so partnerships, S corporations, they're due the 15th day of the third month. So that's March 15 for a calendar year end partnership. If the due date's on a weekend or a holiday, you move forward to the next business day. So, for example, for the 2020 calendar year, April 15th is a Saturday. So you would move forward to Monday. But Monday is actually a holiday. It's Emancipation Day in the District of Columbia. So the filing deadline for 2022 instead of April 15 will actually be April 18. So virtually every taxpayer can request an extension. It's generally a 6-month extension. There's some bizarre rules around corporate extensions, maybe being 5 months, but there's actually a revenue notice. The IRS issued a notice that said, you guys can take 6 months too. So generally a 6-month extension from the original due date. Same weekend or holiday rule. So that would imply, if October 15th, for example, is on a Saturday, you would move forward to the 17th. The extension to file your taxes does not extend the responsibility that you've paid your taxes. And what we'll see is the payment deadline really is an April 15th anyway for most taxpayers. That's not to say that you shouldn't have paid your full tax liability by April 15th. You should have. But what you'll find is you can't wait until April 15th to pay your entire tax liability. There's generally an estimated tax payment requirement if your withholding doesn't meet it. So the statute of limitations is a legal concept. It extends well beyond the tax realm. It's just a legal concept that prevents very old crimes from being tried. And in general, for tax, the rule is 3 years from the later of the due date of that tax return or the date that you've actually filed the tax return. So let's look at an example of that. So Yoda's 2022 year-end tax return is going to be due April 18, 2023. And let's assume for a second he files on that exact due date, April 18th, 2023. And he determines that there's a minor favorable error made by Yoda on the tax return. So he's like, hey, I need to, amend my tax return. Sorry, he doesn't want to. It's favorable to Yoda. So the IRS has until 3 years later to assess Yoda for that additional tax. So the 3 years later would be April 18th of 2026. If Yoda files earlier than April 18th, let's say he files on March 10th, the statute still begins to run. The 3 years still begins to run on the due date. If, however, Yoda files after the due date, the original due date, not the extended due date, so let's say he files on July 3rd, then the statute starts running on July 3rd, right? Because it's 3 years from the later of the due date or the date actually filed. There are some exceptions to the statute rule. So if you have an omission of gross income that's more than 25%, then that actually increases the statute to 6 years. So that's basically like, look, if you have a big boo-boo, the IRS gets 3 additional years to try to assess that tax against you. If you've committed fraud, then the statute is extended indefinitely. And if you've never filed the tax return, then the statute has never started. Because remember, it's the later of the due date or the actual filing. Well, you've never filed. So what you'll find in practice is that occasionally businesses will file a protective tax return, maybe in a state where they don't even think they have any liability. But they'll file a protective one so that at least starts the statute. So a refund, so this is the opposite, right? This is when the taxpayer thinks, hey, you may owe me money back. The refund claim must be filed within 3 years of the filing of the tax return. Okay, well, that's basically the same. Or within 2 years following the payment of the tax, if that period expires on a later date. So basically, it's not like, hey, you've got 3 years to file a refund, but if you paid the tax, so maybe you were assessed an additional tax later on, you pay it, now you want to file for a refund claim, you have 2 years if that payment date expires on a later date. So basically, it allows the window to remain a little bit further open if the payment occurred after the filing date. All right, so tax preparers, tax professionals are subject to a number of different forms of regulation. So various statute, rules, codes, etc. So if you're a member of the AICPA, which of course you are not required to be a CPA, but many are, you're subject to the AICPA's Code of Professional Conduct. You would also be subject to their Statement of Standards for Tax Services. So the AICPA has 7 rules, 7 statements that cover the practice of tax services for members of the AICPA. If you're not a member of the AICPA, there are plenty of rules for you too. So the first is what's called Circular 230, and it's actually a revenue procedure. I take it back. It's a regulation that's issued by the Treasury Department that covers practice before the IRS. And don't worry, we're going to talk about these in more detail. The State Board of Accountancy, if you are a CPA, if you're a licensed CPA, then the State Board of Accountancy probably has rules. For example, in California, we've got the Business and Professions Code that covers accountants. I should say CPAs. And then California also regulates tax preparers. Now, most states do not regulate tax preparers, but the state of California actually does. So a common term for that is to call you an unenrolled preparer, because it means you're not a CPA, you're not an attorney, and you're not an enrolled agent. So you're an unenrolled preparer. But California has rules that cover you as well. Okay. Sorry about that, clicking around a little bit. So the IRS is a bureau of the... Now, we are now, I believe, into Chapter 26. And so I would encourage you to go, shift chapters, or, maybe we just ought to stop right here and do the next video in a little bit. So got a little bit of a short video. All good.